Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so here we are today on the weekend. Juana brought her weekend hair along, so we're going to shoot a video anyway. Okay, so today's video is very simply titled, we're going to start over. Cover what we're going to call it. Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, today's video is what happens to real estate during a recession.
Okay.
There's been a recession predicted. So let's talk about conventional wisdom. Okay, first of all, define a recession. Like, what's the technical definition of a recession? Because it's an actual thing. It has to be measured.
2 consecutive quarters of down GDP.
Okay, GDP is down for the previous quarter.
Mm-hmm.
So now people tend to relate a recession to massive job losses and a bunch of other things.
Because it tends to coincide with that, but not always.
Okay, and sometimes those cause a recession.
Yes.
Okay, the past year, a year ago at this time, there was the 100% of every economics firm and every wealth manager was predicting a recession. They were like, all the leading indicators were a recession. Matter of fact, they were predicting third and fourth quarter is when the recession would begin.
Mm-hmm.
First quarter of negative growth. We just finished the fourth quarter of 2022, and we had a 2.9% positive.
Mm-hmm.
As a matter of fact, it was so positive, it would have been over 4% growth, except for real estate knocked it down 1.2%.
Right.
So home prices being down was a small part of that, because home prices are only down a couple percent. But the biggest thing was the lack of home sales affect the economy, because every time a home sells, you have all these people to get paid.
Right. So it had to do with the number of transactions, not necessarily the home values that were being transacted.
Right. Okay. So we have the number of home sales was down. That affected the. So it wasn't. The idea was, would housing lead this recession? And it didn't happen. Okay. So what we're going to do first is we're going to look at the last 6 recessions and look at what home prices did. So I'll put this slide up here. So it shows the last 6 recessions. Of course, we had recessions. We had one in 2020, which a lot of people don't realize we had one. But that was the COVID recession.
Mm-hmm.
The 2008 one, a lot of people remember, that was a housing-led recession, meaning the recession happened because of housing.
Correct.
Housing started the recession. The recession happened in 2008, but the collapse started in 2006.
Mm-hmm.
Okay? But if you look back, most of the time, home prices go up during recessions, which is counterintuitive.
Right. So most people think that a recession leads to lower home prices, which it doesn't. What happens with a recession is you've got the federal government stepping in, trying to stimulate the economy. One of the ways that the federal government stimulates the economy is by lowering interest rates. Now, I do realize that it is the Federal Reserve that lowers the interest rates, and they're not really a part of the federal government, but let's just overlook that for the time being. So what they do is they lower the interest rates that banks charge to one another, and these are leading indicators, and that causes mortgages to also go down in interest. Now, when mortgage rates go down, that incentivizes people to purchase homes.
Now, so you're probably saying, well, how can you prove that? Well, the next chart proves that.
Mm-hmm.
This is what happened to interest rates the last 6 recessions. This was from the beginning of the recession to the end of the recession, and what happens. Now, if you look back at 80 and 81, those were 2 big recessions. A lot of you may not be old enough to remember this. Interest rates were extremely high. At one point, they were 17%. Mm-hmm. So when you're looking at -4, -5, they went from like 17 to 12. Mm-hmm. Okay. The last recessions, interest rates fell much less because interest rates have been historically much lower. As a matter of fact, the last recession, 2020, there was literally the federal funds target rate was 0 to 0.25. It was like they were trying to target a 0 interest rate. Banks could freely lend money to each other. So interest rates on mortgage mortgage rates actually got down below 3% for a while. There were people doing refis at or maybe below 2%. We know people that did refis at like 1.75%. Mm-hmm. Okay, so you're saying, why do you care? Well, why does this matter? This is why. The interest rates have went up from 3 to 7.5 mortgage rates and have dropped already. They're already starting to drop. That whole what happened to mortgage rates is in the past already, and home values didn't crash. We have some markets where from peak to trough, there have been a pretty substantial decline, mostly in the Western US. Here in Las Vegas, we have had, I think, 8% peak to trough declines. Overall, there are segments of the housing market and segments of the hyperlocal real estate market where the decline was more, but somewhere their home prices have gone up.
Right.
And segments of the market where home prices have gone up, like
Absolutely.
price ranges.
Yes. So we actually put out a video about that shows you kind of by zip code in Las Vegas what home price, what appreciation did year over year as of last October. So you can kind of see what that looks like when you're looking at real estate values in a hyper-local way to really understand the huge swing just from one block to the next.
Okay, so every time somebody has asked me, but Todd, home prices though, the recession that's going to happen. Now remember this, a year ago, everyone was predicting a third and fourth quarter recession. It didn't happen, right? And now so 35% of those people are gone. They're not predicting any recession. You have 65% only predicting a minor recession only for 2 quarters, first and second quarter, okay? I'll tell you how bad their estimates were. The fourth quarter of 2022, the airline industry had record revenues. They had the most revenue they've ever had, despite the fact that they're not even back to their pre-pandemic flying levels. That's how poorly the people who a year ago who were making like wealth management decisions screwed up. And then, of course, they make investments based on what they think is going to happen in the economy in the future, right? So the bottom line is the people who are predicting what the economy is going to do don't really know, right? And then the other thing, too, is let's say we do have a recession. Well, if you look at this chart, it's actually good news for the housing market, right? Because what happens, the Fed says, oh, shoot, that we overshot inflation. Now we have to stimulate the economy, let's drop interest rates. As soon as that happens, the 10-year tanks and the mortgage interest rates tank even further, like much quicker. And what's going to happen, Juana, this spring if mortgage interest rates keep going down?
So if mortgage interest rates keep going down, then buyers will come back in even a more robust fashion. And unless inventory goes up, these buyers will be competing for an insufficient amount of homes. So insufficient amount of homes equals multiple offers equals probably a rise in the purchase price for these buyers who are the end purchasers of these properties.
Yeah, it's gonna. I think the spring's gonna be very interesting from the fact that there's still an extremely low supply. The demand in the spring will be far more than it was in the fall.
Right.
It may not be to what it was the spring of last year because there were a lot of panic people who were trying to buy to catch interest rates before they went up. But the falling interest rate are definitely going to catch people. We have a video we're going to do tomorrow that will absolutely blow you away with the number of people that are expected to purchase a home, that have said they're going to purchase a home in 2023. It will knock you off your chair.
Right. So, but remember, not every segment of the market will participate in this. So we are not necessarily expecting this in the million-plus market for Las Vegas. And then again, whatever that luxury market is in your market, I don't know that they're going to participate in that as much as people, certainly in Las Vegas, that are 500,000 and below. I think they'll participate a lot more in any sort of increased buyer interest and increased activity. So it's going to be interesting to see what happens to those people in the middle, those people between 500 and a million. I think those people are the ones that I think are most interesting to me, because that's where I see kind of that more trepidation as to whether those are the move-up buyers, right? So what are they going to do? Yes, they can sell their home under 500 to move up, but what are they going to find between 500 and a million for them to move on to? So I think that's going to be an interesting segment of the market to watch, at least here in Las Vegas.
The bottom line is this. If somebody says to you, oh, but the recession, I'm going to wait till the recession and home values tank, you can smile knowing that that's actually great. Historically, it's great for housing. Interest rates go down, home prices go up. Recessions are not evil, bad things for the housing market. They're actually almost non-events. They more likely help the housing market than hurt the housing market. the only thing people can usually argue is, but job losses. People are forced to sell. The unemployment has never been higher. The economy right now is creating more jobs. The what?
Unemployment has never been lower.
Yeah, employment has never been higher.
Correct.
Unemployment has never been lower. It's the lowest it's ever been. There's more jobs being produced every quarter than people that can fill them. And there's zero people, almost the lowest foreclosure rate we've ever had historically. Like literally everything is going great for the housing market except for two things. There's not enough homes for people to transact, which is causing, I'll use the term goofy, I know you hate that, goofy stuff to happen, meaning it's causing real estate to look worse than it actually is. And the interest rates are artificially high because of what the Fed has done over the last few months. But so
we'll see how it goes.
Yeah.
So tell us what you think. We're interested in your thoughts, so please leave us your thoughts. Tell us where you're watching from. If you have suggestions for videos for us, please, we love your suggestions, and we'll be happy to try to accommodate you. Thank you for watching. Please subscribe, hit the notification bell, like the video, share the video, and we'll see you on the next video. Bye.
Bye.